Ladies and gentlemen, a very good evening and welcome to the earnings conference call of EFC Ltd for Q1 FY25. We have with us today Mr. Umesh Sahai, Founder and Managing Director of EFC India Ltd, and Mr. Nikhil Bhuta, Whole-Time Director of EFC India Ltd. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I would now like to hand over the conference to Mr. Nikhil Bhuta, Whole-Time Director, to give this opening remarks and discuss further on the Q1 FY25 performance. Thank you, and over to you, sir.
Thank you, moderator. Good afternoon, everyone. I'm Nikhil Bhuta, Director of EFC India Ltd. I would like to extend a warm welcome to all of you joining our earnings conference call today. We humbly value your ongoing interest and support in our company. EFC India Ltd, as you know, is a real estate as a service company operating through three major verticals. One is the managed office business, where we have managing about 2.25 million square feet of assets, with 57 sites under management across 7 cities. We have a sitting capacity of about 47,000 seats and more as on 30th June 2024. We obviously have two other verticals. One is the design and build turnkey contracting verticals, and second is the EFC Design Industries Limited, which is the furniture manufacturing vertical. Through these three verticals, we operate as an integrated real estate service providers. In today's call, we'll review our financials and operational performance for Q1 for the financial year 24-25. We will also highlight key strategic decisions made by our group and share our future outlook. For Q1, EFC India Ltd has achieved impressive financial results with consolidated revenue reaching approximately rupees 105.28 crores and EBITDA of around rupees 49.62 crores and a profit after tax of rupees 15.77 crores. This result underscores our resilience, strategic focus, and the management's unwavering commitment to driving the company's growth. Let us also look at the revenue breakdown, business segment-wise, where the rental segment generated approximately rupees 66.79 crores, accounting for about 63.44% of our total revenue. In comparison, the design and build turnkey contracting business contributed rupees 35.3 crores, representing approximately 36.56% of the total revenue. At EFC, we create synergies through our dynamic workspaces managed office operations under the brands such as EFC, which is an enterprise solution, Sprint, which is a business center solutions, and Big Box, which is a new entrant to our bouquet of brands that we operate with. Additionally, we offer exquisite furniture through EFC Design Industries Limited and provide meticulous interior design under Whitehills Interior Limited. Starting from the managed office business sector, we have significantly enhanced our capacity this quarter by increasing the area under leasehold rights by about 3 lakh square feet, adding over 7,000 seats across 7 centers and 4 existing cities where we were already operating. Additionally, we have acquired approximately 80,000 square feet of property at prime location in Pune. This is a freehold property that we have acquired under ownership, which will be developing and leasing under our managed office business model. This acquisition has the potential to generate an annual revenue of about 14.40 crore rupees. As on 30th June 2025, we are having about 2.25 million square feet of area under management. We have total 57 sites under our management across 7 cities in India, with total seating capacity crossing over 47,000 mark. In design and build division, we have secured contract exceeding rupees 75 crores during this quarter across various business sectors and are currently negotiating additional contracts valued over 100 crores. Notably, one of the biggest achievements that we undertook during this first quarter was successfully completing over 100,000 square feet of project for Coforge in just 62 days, demonstrating our efficiency and capability in delivering large-scale projects. In furniture manufacturing segment, we have secured regulatory approvals to establish an expansive manufacturing facility on over 3 acres in Fursungi, Haveli Taluka, Pune. This state-of-the-art plant boasts cutting-edge machinery and high-tech QC lab and is strategically subdivided into 5 dedicated manufacturing shop floors. The facility includes a modern customer experience center and is supported by an efficient support infrastructure for seamless operation and management. Our workforce at the manufacturing facility of over 200 people will drive the plant's operation during the following quarter of this financial year and going forward. With plant and machinery configured for peak efficiency, production trials are slated to begin during August 2024, with commercial production set to be launched by September 2024. On acquisition front, EFC Ltd, a key unlisted subsidiary of our company, has strategically acquired 51% stake in Big Box Venture Private Limited. As a result, Big Box Venture is now a step-down subsidiary of EFC India Limited. Big Box Venture, with its impressive portfolio of over 3,000 seats in Pune, is aggressively expanding into NCR region, Ahmedabad and Kolkata, significantly enhancing our overall market presence. Additionally, we have also incorporated a real estate investment trust, REIT, to establish small and medium REIT with a substantial corpus of rupees 499 crores, which will further strengthen our investment capabilities and market reach. Additionally, during this fast growth journey, we are more conscious about best-in-class governance. Accordingly, we have conducted an ESG gap audit to identify areas for improvement and appointed a dedicated ESG team to ensure compliances, beginning with the establishment of the highest level of governance, the G power of the ESG. We are actively implementing initiatives to reduce greenhouse gas emissions by utilizing green power and establishing tools for effective electricity consumption control. With this brief, I thank you all, and I now open the forum for question answer session. Moderator, please, could you take over in this?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manav Jain from SP Capital. Please go ahead.
Hello. Thank you for the opportunity. So my first question would be regarding the furniture segment. So we were going to start the production from this year. So could you give some light regarding that segment, and how would be the selling go? Would it be internally or would we be selling to other people as well?
Yes, thank you and welcome. Yes, regarding the furniture segment, I'd like to update you all that, we are just slated to do the commercial trial during this month, in next week's time. And the full-fledged production, the commercial product activity would start in the month of September, that is the coming month. Okay. With regards to, where would be selling our products. So yes, obviously, as you know, or as you have observed, that all our businesses are quite integrated as well as standalone as we use. So they are not dependent on our existing businesses. Yes, but our existing business would become an anchor client to them for sure. So as far as we are concerned, we are looking at right now two major segments, residential and commercial sector, to focus on manufacturing the product for those sectors. So in the commercial sectors, obviously chairs and the workstations, etc. In the residential, you have different types of loose furnitures which goes in for furnishing the residential premises. So we will be doing both. We will be doing for external clients. We will also be tying up with large distributors. We'll be appointing distributors across. We'll also be attempting to do some sort of white labeling where there is a significant brand presence and a significant underlying contract that we can secure. So it would be a wholesome business, and it will be, Manav, that it will be like a standalone business on its own. Right. So EFC is concerned, they will become one of its customers, not beyond that.
Okay, got it. And what would be the top line that we would expect once the production starts September?
So as you could see that this financial year will be operational only for 6 months. And naturally, the first 3 months would be, you would appreciate that those are the months where there will be, more trial and errors because, you are operating those machines for the first time and you are trying to take the maximum benefit on the efficiency. So, we still believe that looking at the pipelines even the EFC has, we should be able to at least achieve more than about 50 to 75 crore easily during this financial year only, during the 6 months that we are talking about, which is a very conservative number, to be very honest, because, that is the kind of number I'm just talking that even EFC can handle alone. So forget about if I'm able to kind of get any new businesses which my sales team, which is already operational and have already targeted meeting, few of the brands for a white labeling business, and few of the large consumers in some of the consumers in the hotel industry, some of the consumers who are like a large distribution across. So those orders are in the discussions. But on a conservative basis, we should definitely be in a position to achieve anything around 50 to 75 crore of turnover in the furniture manufacturing division this year.
Okay. Got it. Thank you for that. And regarding we recently added 2 lakh square feet of space at different locations across India. So what would be the space used for? Are those seed additions or they are the new centers that could be built in the future?
No, these are the centers where we have already either added the seats or are under development. So what I mean to say is that over about 300,000 square feet have been added during this quarter, and with that we've been able to develop about 7,000 odd seats across 7 different centers.
Right, got it. So my last question would be, are we maintaining the guidance for doubling the top line by FY25?
Yes, we are all geared up to do so. That's the plan, and that has been the overall and that's how the aggressive some of the actions that the companies are taking. We are completely geared up for that, and I think by end of this quarter we will be in a much better position to confirm that position. But yes, as of now we are 100% geared up to achieve that target.
Okay, thank you so much for the answers and all the best.
Thank you so much, Malav.
Thank you. The next question is from the line of Pranav Shrimal from Pink Wealth Advisory. Please go ahead.
Yeah, I hope I'm audible. Hello.
Hi.
Yeah, congrats sir on the great quarters. I just had a couple of questions. So one would be, we have almost projected that we are going to add around the new seats. By when will those new seats be operational, the 47,000 seats that are under development?
Sorry, your voice was coming. You said how many seats, when will be operational? You said something I didn't understand.
Yes. There are seats under development of around 4,278. By when will these seats be operational?
These seats would be already, some of it almost be already operational or would be operational during the second quarter already.
Okay, so majority of them will be operational by the end of Q2.
Yes.
Okay, so the revenue will start coming in from Q3 for around 6 months.
Absolutely.
Got it. And second, sir, we have recently acquired the a property in Pune. Just wanted to figure out, is that also going to be one of the office spaces?
Yes, absolutely. That's the idea. Just that, the instead of landlord, I'll be my own landlord, and we'll be operating only the managed office business from there, which is our core business. So the property acquisition is just that, right now what we do is that strategically, if we are able to get a property at a price where, practically I'm just replacing my rental with the EMI, then it kind of helps me to build the assets alongside rather than, keep paying to the landlord and then completely remain at their mercy at the end of the 5th year. So that's the strategy which we are using. And depending upon, the amount of exposure that our balance sheet permits, we'll definitely, kind of take an LRD structure on our balance sheet and acquire these assets, but eventually use it only for our managed office operation.
Got it. So was this property acquired through the REIT or was this done through EFC alone?
So, like I said, that EFC acquisition would depend entirely upon, the debt equity ratio that we as an organization are comfortable with, and obviously the standards that one needs to follow. So we'll not be acquiring all the property under EFC. With regards to the property acquisition and the REIT is concerned, the idea behind using REIT as a structure is it's a win-win proposition for both the investors in the REIT, the unit holders in the REIT, and for us, because what happens is the investors in the REIT would be able to generate a yield which is better than a standard leasing rate when it comes to the yield generation from managed office operations. Correct. So let's say if you are just taking a property and leasing out to one customer, your standard lease rentals are around 7%, maybe maximum. While if you consider it under a managed office operation, this can substantially be increased because, after paying the rent to the landlord, I'm still making my money. Okay. So as an EFC, I will be making my money in terms of the operation fee that I will be, charging to the REIT. And the investor in the REIT will also be making more money than otherwise they would have invested in a commercial property for a rental yield. So under REIT, we are trying to, acquire assets by raising capital under REIT. We will also be obviously we are the sponsor to the REIT, so we'll be putting our own money also. And we'll invite contribution from other potential investors. And we will operate this, some of the properties under this structure and we'll be managing them, so we'll be virtually controlling the operation of those properties also.
Got it, sir. And just one last question. In the design and build space, we have received contracts worth 75 CR. So that is including Coforge or excluding Coforge?
So Coforge contract was received last quarter. This quarter, the Coforge execution had taken place. This 75 crore is excluding Coforge contract.
And the realization will happen within this year, or will there be some overlap?
Sorry, can you repeat again? Sorry.
The 75 CR, will that be realized within this FY, or will there be some overlap?
No. It will get realized this quarter. But generally, what happens, as you would appreciate, that each contract, once the entire cycle of you really getting the contract, getting the documentations in place, and then the mobilization and the execution, that cycle generally spread over 2 quarters, depending upon the timing at which you have able to secure the contract. So let's say if I secure a contract for 75 crore in first quarter, obviously some of them have been concluded in the first quarter, and the rest of them would get concluded in the second quarter.
Got it. And just one last final question. From which city are we seeing the maximum demand coming from? Or is it still spread across evenly?
You're talking on the DNB division or on the managed office business?
Managed office.
Managed office, as you probably know the sector, then about 9 cities in the country are the prominent cities. which is, the standard NCR region. On the southern side, you have Bangalore, Hyderabad, Chennai. On the western side, you have obviously Gujarat, Ahmedabad. And then in the, in Maharashtra, you have Bombay, Pune. And on the eastern, you have Kolkata. So these are obviously the major cities. Some of the two-tier cities are also coming up well, primarily because of certain specific developments happening on those cities and some specific types of customers, occupying those areas in those cities, like cities like Indore, cities like Coimbatore, cities like Chandigarh. They are all really coming up well. But as of now, looking at our overall portfolio and our overall presence, we still believe that for at least foreseeable future, we'll remain focused in these 9 cities. While, like I said, the cities like Ahmedabad, we never wanted to go alone, but our clients took us there. So tomorrow our client may took us to some other 2-tier cities. So we are open to that proposition, depending upon the viability. But in terms of focus, our focus will remain on these 9 cities.
9 cities. Got it, sir. Thank you. Thank you so much, and best of luck.
Welcome. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Rahul Matlani from Reco Capital. Please go ahead.
Hi, sir. Great set of numbers. I had a first question. The acquisition which we've done with Big Box, how much will this contribute to our revenues and numbers?
So when we acquired Big Box, the Big Box was already doing around 2 crore a month of top line. So that was the kind of top line they were already adding on a monthly basis. That's with about 2,900 seats. Since our acquisition, they've already kind of added about 2,000 more seats because this is a company which does a lot of business where they search a client first and then do the business back to back by identifying a property. So that gives a lot of stability in terms of the cash flow that they will be able to generate and the occupancy level that they'll be able to provide. So I think that's really going to help us going forward. And they do operate right now under small-sized areas. I mean, when I say small size, mean 10, 15,000, 20,000 square feet of space that they take it on lease, and then accordingly they further sublease to the potential customers on managed office business. But the overall philosophy, the culture are all matching and aligning with our group, and we are really expecting. And I mean, just to give you an idea, the total remaining contract value of this contract that they have with 3,000 seats is roughly around 86 crore. So I mean, I'm just saying at the time of acquisition only they had a remaining contract value of more than 86,000 crore. And with the new additions, it will certainly keep adding to our top lines and the bottom line as well.
Sir, and just to follow up to the same, what are the seat expansion targets you set for Big Box and EFC together?
So we allow Big Box to operate independently, and it's
Okay. That really helps. Just a second question and a final one. So where are we on the REIT progress? And
yeah, so we have already filed the application. There's a couple of round of
Hello, sir.
I think we lost you, sir. Yeah.
Management, we are unable to hear you. Ladies and gentlemen, we have lost the management line connection. Please stay connected while we reconnect them. Thank you.
Ladies and gentlemen, please stay connected. The call will begin in the next few minutes.
Ladies and gentlemen, thank you for patiently holding. We have the management line back on the call.
Sorry for this interruption, but please, can we carry on? So I was explaining about the status on the REIT. So as I said that, the REIT application has been already filed with the SEBI. A round of discussion has already happened with the regulators, and they are really happy with the fact that we are the only one who is not from the fractional ownership platform, and they're really excited to extend their all support, and we are expecting